Picture this: you're sitting on a pile of cash, torn between chasing growth and securing steady income. What if I told you there's a way to have both? Today we're diving into 3 game-changing ETFs that are transforming how investors generate income. And these aren't your typical dividend funds. In a market where traditional income strategies struggle to keep up, a new breed of ETFs has emerged. Using sophisticated option strategies, these powerhouse funds are delivering jaw-dropping yields of 7% to nearly 10%, paid straight to your account every single month. We're talking about yields that make traditional dividend aristocrats look like penny pinchers. Our lineup features 3 standout performers: an innovative pioneer that kicked off the income revolution in 2020, its tech-focused sibling that brings high yields to the NASDAQ universe, and a bold newcomer that's pushing the boundaries of income generation. Each fund offers a unique approach to balancing substantial monthly income with market exposure. But here's what makes this story fascinating. These aren't just income funds. They're sophisticated investment vehicles that adapt to market conditions, using advanced option strategies to turn market volatility into steady income streams. Whether you're a retiree seeking monthly income or a growth investor looking to diversify, these ETFs offer compelling solutions for today's market challenges. If you're ready to level up your investment game, smash that like button and subscribe our community of smart income investors. Now, let's dive into these game-changing ETFs. ETF Analysis Methodology. To identify truly exceptional income ETFs, we need a robust framework for evaluation. Our analysis starts with yield potential, not just the headline distribution rate, but the sustainability and consistency of these monthly payments. We'll examine how each fund generates its premium income and whether those yields have remained stable across different market conditions. Risk assessment forms the foundation of our analysis. We'll scrutinize each fund's option strategy implementation, examining how they balance income generation with market participation. The quality of underlying assets plays a crucial role here, as does each fund's approach to upside potential and downside protection. This risk-reward dynamic directly impacts your portfolio's stability and growth potential. Management strategy differentiates average performers from market leaders. We'll dive into how each fund selects option strike prices, constructs its portfolio, and handles rebalancing. Fee structures matter too. Every basis point saved on expenses flows directly to your returns. The efficiency of these management decisions becomes particularly important in volatile markets. Historical performance ties everything together, revealing how these strategies perform in real-world conditions. Beyond simple total return metrics, we'll examine how each fund balances income generation with capital appreciation potential. Most importantly, we'll analyze performance across different market environments, helping you understand which fund might best suit your investment goals and risk tolerance. ETF number 1, JP Morgan Equity Premium Income. ETF JEPI launched in 2020 and sparked the entire high-income ETF revolution we see today. With $38.5 billion in assets under management, it stands as the largest fund in our lineup, charging a 0.35% expense ratio and delivering a 6% return over the past 12 months. The fund strategy is distinct. Instead of buying the entire S&P 500, the managers selectively own large-cap and mega-cap S&P 500 companies. With 129 total positions, JEPI's portfolio features tech giants like Amazon, Meta, and Nvidia. To generate additional income, the fund sells out-of-the-money call options, specifically on the S&P 500 index. Here's how the option strategy impacts returns. When the S&P 500 rises above the selected strike price for that week or month, JEPI cannot participate in any gains beyond that point. This means while you get premium income from selling options, your upside potential is capped when markets rally strongly. The distribution yield tells this story clearly. Throughout its history, JEPI's yield has fluctuated from below 5% to as high as 12% in early 2023. Currently, with the S&P 500's strong performance making options trades less profitable, the yield sits at 7.1% paid monthly. For income-focused investors, JEPI offers access to carefully selected S&P 500 large-cap stocks combined with options premium income. The fund's performance demonstrates how market conditions directly impact distribution levels through options profitability. ETF number 2. JP Morgan Nasdaq Equity Premium ETF, JEPQ. Following JEPI's success, JP Morgan launched JEPQ to bring premium income strategies to the Nasdaq 100 space. With $22.4 billion in assets under management and a 0.35% expense ratio, this ETF has delivered a 12% return over the past 12 months. JEPQ's strategy mirrors JEPI's approach, but focuses exclusively on the Nasdaq 100. The fund holds 105 positions, with top holdings including Nvidia, Apple, Microsoft, Amazon, and Alphabet. Instead of selling calls on the S&P 500, JEPQ sells out-of-the-money call options on the NASDAQ 100 index while holding the underlying securities. Let's break down how this works. The fund combines dividend income from its holdings with premiums from selling these Nasdaq 100 index call options. When they sell an out-of-the-money call option, investors can still participate in some upside until the strike price is reached. However, any gains above that strike price are capped. The fund's distribution yield has shown significant variation, ranging from below 5% to over 12% in early 2023. Due to the Nasdaq's strong performance, yields have recently dropped below 10%, currently sitting at 9.4%. These distributions are paid monthly, providing regular income for investors. For those seeking tech-focused income, JEPQ offers a balance. While the strong Nasdaq performance has reduced yields from their peaks, the 9.4% monthly distribution still provides substantial income, while maintaining some potential for capital appreciation through its out-of-the-money option strategy. ETF number 3. Goldman Sachs Nasdaq 100 Premium Income ETF, GPIQ. Let's examine our third high-yield ETF, where Goldman Sachs puts their own spin on premium income with the Nasdaq 100 Premium Income ETF, GPIQ. With $400 million in assets under management and the lowest expense ratio on our list at 0.29%, this ETF has delivered an 11% return over the past 12 months. What truly distinguishes GPIQ is its bold at-the-money call options strategy. Here's how it works. While other ETFs like JEPQ sell out-of-the-money calls, GPIQ sells options right at the current index price. Let's break this down with a practical example. Imagine the Nasdaq 100 index is trading at $50. JEPQ might sell call options at $55, allowing investors to capture gains between $50 and $55. However, GPIQ sells calls right at $50, meaning you sacrifice virtually all upside potential in exchange for higher immediate income. This aggressive income-focused approach has enabled GPIQ to generate a substantial 10.19% yield, paid monthly. The fund maintains a portfolio of 112 holdings, anchored by tech giants Nvidia, Apple, Microsoft, Amazon, and Broadcom, nearly identical to GPIQ's top positions. However, the similarity in holdings makes the strategy difference even more striking. By selling at the money calls instead of out-of-the-money calls, GPIQ maximizes current income at the expense of potential capital appreciation. For investors, this means GPIQ represents the most income-focused option among Nasdaq 100 premium ETFs. While you won't participate in market rallies like you might with out-of-the-money strategies, you'll potentially earn higher consistent income. Combined with the lowest expense ratio in its category at 0.29%, GPIQ offers an efficient vehicle for investors prioritizing current income over growth potential. Portfolio integration requires careful consideration of your investment timeline and goals. For short-term investors seeking income, these ETFs can serve as powerful cash management tools. Consider allocating a portion of your portfolio that would typically sit in low-yield cash positions to these premium income generators. The S&P 500 focused fund offers broader market exposure with moderate yields, making it suitable for conservative investors seeking steady income. The Nasdaq-focused options provide higher yield potential but come with increased tech sector concentration, ideal for those comfortable with technology exposure. The Money Strategy Fund suits pure income seekers who prioritize yield over growth potential. Diversification across these strategies can help optimize your income stream. Consider pairing the S&P 500 and NASDAQ options for sector diversification, or combining out-of-money and at-the-money strategies to balance growth potential with immediate income needs. Premium income ETFs have revolutionized portfolio income generation, offering yields that consistently outpace traditional dividend strategies. Through sophisticated options implementations, these funds provide monthly income streams while maintaining exposure to market-leading companies. Each strategy we've explored offers unique advantages: broad market exposure with moderate yields, tech sector focus with higher income potential, and maximum yield generation through aggressive options strategies. The key to success lies in matching these characteristics with your investment goals and risk tolerance. As markets evolve, these innovative ETFs demonstrate that investors no longer need to choose between growth and income. By understanding each fund's approach to premium income generation, you can make informed decisions about incorporating these powerful tools into your investment strategy. If you found value in this deep dive into premium income ETFs, hit that like button to help more investors discover these powerful income-generating tools. Subscribe to stay updated on more investment strategies and market insights. Drop a comment below sharing which ETF strategy interests you most. Are you Team S&P 500, NASDAQ, or maximum income? And don't forget to share this video with fellow investors looking to boost their portfolio income. This content is for educational purposes only. Always conduct your own research and consult with a financial advisor before making any investment decisions. Past performance does not guarantee future results. Thanks for watching, and I'll see you in the next analysis.